All right, we are back, and over to Denise Harlow to get us introduced today.
Thank you, Cashin. We are thrilled to have you all on the phone today and on the web with us for our cost allocation webinar. Our presenter today is Kevin Mirren. Kevin has done training for the partnership in the past. He will also be joining us in Fort Lauderdale in early January to build on, I believe, today's conversation quite a bit, and also talking to us about super circular issues. Kevin is a certified public accountant. He currently serves as the CFO and Vice President of Administration at Common Bond Communities, the largest nonprofit provider of affordable housing in the Midwest. He has trained also with NASCAP and is very familiar with the Community Services Block Grant and community action agencies and federal funding as a whole. So we hope that you make this an engaging webinar today. Put questions in the Q&A box. I know there's going to be some polling going on to keep you engaged in the webinar, and we look forward to your feedback following the session. Kevin, we'll turn it over to you.
Excellent. Thank you very much, and an early happy holidays to everyone. And I guess everyone is looking for a cost allocation for their holiday present. So with that, let's go ahead and begin. The agenda that we're going to look at today is starting out with OMB Circular A-122 and looking at the current rules around cost allocation and how to handle that, developing a plan, how you can actually use this information to develop a plan for cost allocation within your organization if you don't have one, or perhaps to reevaluate yours if you currently have it and make sure that it's meeting all of the technical requirements of the OMB circulars. We'll step through an allocation example. Of course, there are numerous examples, and we're only going to look at one potential example, but there's a number of different ways to do cost allocation. And we'll step through one example so that we have a practical application of what we've talked about today. We'll talk some more about indirect cost rates, kind of as an alternative to cost allocation, and how do those two concepts overlap, and what do they mean. We'll look at a GAO report that evaluated in depth the concepts of cost allocation and indirect cost rates and what they found on a nationwide study, and what can we learn from that. We'll also look at the new OMB guidance, or the super circular, and see what changes might be forthcoming to cost allocation, and what things do we have to be proactive for and get ready to anticipate coming about that might be changes, some of the biggest changes to affect federally funded nonprofits in a number of years. And then finally, we'll kind of review what we've talked about, and also some what I refer to as tricks and traps from the trade, looking at some things that we've come in experience with as I've worked with cost rates and indirect cost plans over the years, and making sure that you don't end up in the same trouble that I have seen other folks in. So with that, let's go ahead and begin. So at the most basic level, what we were talking about is cost, and federal cost to be allowed to be a federal reimbursement on a federal grant project has to have a number of different characteristics. A-122 specifically lists these characteristics. This is an inclusive list. In other words, all items of cost must contain all of these elements to be an allowable federal expenditure for reimbursement. It's not a majority. You can't have most of. You can't have two of the three, whatever. It is something that you need to include all of the above sort of thing. So first of all, a cost must be reasonable. It can't be an unreasonable cost. Even if it's an allowable cost, it still has to be reasonable to be an allowable federal expenditure. It must be allocable. Only the share of the expense or the cost that benefits the program is allowed to be charged to that program. It must be consistent with the organization's policies and procedures. In other words, you can't have a two-tiered cost system, one for federal costs and one for other costs. It must treat costs consistently across your organization. GAAP, the cost must be determined in agreement with generally accepted accounting principles, or GAAP, and it has to meet those elements of accounting to be required or an allowable cost. It cannot be included as cost or match in another federal program. In other words, you can't use federal to match federal. You can't double dip is basically what that means. Of course, the cost must be documented adequately. It can't just be a number that was entered into your general ledger system. It has to have an invoice. It has to have supporting timesheets, etc. And it must be net of credits. So if you receive a rebate or a credit for making an expenditure, you are only allowed to charge to the federal project the net amount of the expense, not the gross amount, and then somehow keep or take that credit and use it elsewhere. Total costs for a federal project are total costs plus direct, which equal direct and indirect costs. Direct costs are actually pretty easy, and we're not going to spend much time talking about those today, but the direct costs are costs that you can identify with a final cost objective. In other words, if it's a weatherization program, the cost of the person who does the weatherization or the weatherization supplies, those are direct costs. For CSBG, it might be a case manager that is a direct cost to that program. To LIHEAP, the direct cost might be such things as the actual supplement or the support to the participant. Indirect costs are costs that are incurred for the common or joint objectives. These are costs that cannot be identified specifically with a final cost objective. And then finally, a third type of cost is a joint cost. A joint cost is a cost that benefits more than one program but doesn't benefit all programs like an indirect cost would. Examples of indirect costs might fall into two major categories. Typically, we think of indirect costs as falling into a facilities bucket, which includes such things as depreciation on buildings, interest on debt, operations and maintenance cost of facilities. Another major bucket that indirect costs fall into is administrative cost, the cost to administer or to run an organization that benefit that program. These include, but are not limited to, things such as the director's office, accounting or fiscal, and the personnel department or human resources office. Planning and other such support activities also come into play as administrative indirect costs. Things that are specifically excluded from indirect costs are unallowable costs and capital expenditures. Unallowable costs and capital expenditures are direct costs, but ones that may or may not be allowed to be charged to federal projects. An alternative method from cost allocation is certain methods. There are three major methods of indirect cost allocation. The first, and not all that often used anymore, is the direct allocation method. Under direct allocation, each cost is a direct charge to a program. So there are no such things as indirect cost. When each invoice or each personnel payment is made, it is charged on the spot to the programs that are benefited in the ratio that's benefited. So if you have one or two programs, which most CAP agencies have significantly more than that, a direct method may be just fine because you're only splitting a cost between one or two different costs. However, if you have multiple programs that you're running, it is almost impossible to directly allocate each and every expense. This is a method that existed long before we had the information systems that we currently have and is probably very rarely seen. A second method is the simplified indirect cost allocation, and this is used when programs benefit from indirects to roughly the same degree across the board. In this instance, indirects are allocated on a single base. Typically, that is either direct wages or direct labor hours. However, if you have more than $10 million in federal financial assistance, you are required to have at least two administrative pools, one for facilities that we talked about earlier, to include the cost of running the hard real estate assets, and the other administrative, so those functions that are more of a support type function. The third and final type of methods of indirect cost allocation is what is referred to as multiple allocation. In multiple allocation, it's basically the same thing as the simplified method, although you may have multiple pools of indirect costs. So instead of just having the 2 pools that we had talked about up above, you may have 5, 6, 10, or 50 different allocation tools or pools. Some practical applications to think about as you move forward with this. Oh, first, let's do our first polling question.
Sure, everyone. That should be opening up on that right-hand side. And it is asking, which cost allocation charging method does your organization use? Would that be A, direct charge allocation, meaning each expense is broken out, B, pool charges, or C, I don't know. You do have about 35 more seconds or so to get an answer in, and then we will display the percentages out to everyone. All right, a few more seconds to get those answers in for this first poll. All right, our poll is officially closed, and we will be able to share the results.
Well, this is interesting. Actually, there are more people doing direct charge allocation than I would have guessed. 27% of the group is doing that. Pool charges are 43% of the group, or kind of the vast majority, which is exactly what I would have expected. So all of those methods are allowable, and neither is right or wrong. It's just a matter of what happens to fit your organization best. So let's continue with practical application in terms of trying to decide what might be the best method for your organization. If we split code each transaction, or the direct charge allocation, we have to know the spending status of the grants at all times. In other words, we get to know exactly what has been charged for each of the particular federal projects that we run at that very moment in time. There's no month closeout process that needs to occur. We know exactly what has been charged at that point in time, which is a definite positive. If we allocate to pools and do a pool allocation method, one of the second or the third method, this is perhaps easier to administer, and it also allows us to track and budget the administrative functions. This allows us to see how much HR is costing us, how much is the fiscal office costing us to operate, and we can budget that function. So instead of the cost getting hidden as a small charge to each grant, it is centralized first before it's allocated out. The challenge with this method, however, is that a lot of times department heads only think of the cost to run their programs, or what we refer to as the direct costs, and at the month-end closeout period, when they get a charge for the administrative functions getting closed out, they get concerned or upset about not knowing what those charges are and why did my expenses all of a sudden increase substantially from what I had just seen last month. So this just means that we probably need to have a really strong education process in place to let program managers or department heads know what to expect when it comes to indirect costs. With that, let's go ahead and do our second polling question.
All right, that poll is open over on that right-hand side, and we are asking how many cost allocation pools does your organization use? Is it none because you use some other method? 1 pool, 2, 3 to 5, 5 to 10, more than 10, and again, I don't know. So again, you have a little over 30 seconds to continue to get those answers in. All right, a few more seconds. We have several people that have already put in answers there, but we'll finish up here in just a few moments. And our poll is closed. It will take me a few seconds, and then we should be able to display out to everyone. All right, you should be able to see your results.
Wonderful, and it looks like we're about evenly split amongst the number of pools that people are deploying. So that is also, once again, not very surprising. I would just say that, in general, the fewer pools that you can use, cost allocation pools, the easier it is to close out at the end of the month, and it makes that process that much simpler. Also, if something happens and there is a last-minute adjustment that needs to get made, if you have to undo all your closeouts from your pools and then reallocate, that can be time-consuming and can cause significant frustration for your poor accounting department. So those are just things to watch out for. At this point, I would just pause for a second to see if there's any questions before we go on. And we'll give it just a couple of seconds to see if anything comes through. And Cashin, if you can help me monitor and make sure if there's any questions.
We haven't seen any that have come in at this point. Of course, we do encourage you to put them in at any point in time, because we will do this a couple of times to try to stop and take questions as they come in. So.
Excellent. Well, with that, I'm going to go ahead then, and we'll have another break where we'll ask specifically for questions later. But please feel free to put them in as we're going through. Next, let's take a specific example and look at developing a cost allocation plan and kind of putting to use to practical terms what we have talked about so far. So in our example, we're going to look at a multiple allocation method. And there's a number of steps that we need to do to make that process successful. I have 6 steps, and of course it sounds pretty easy. There's a lot of work involved in those 6 steps, but really the steps themselves are not that complicated. Step 1 in this process is to identify your pools. In other words, look at the costs that have similar characteristics. This might be depreciation and use allowance, interest, operation and maintenance expenses, general and administrative expenses, and whether we include those all as one category or whether we treat those as separate categories. Planning, the executive director, human resources, finance and accounting, information technology. I've seen it done all sorts of different ways, and once again, there's really no right answer or wrong answer to it. It's whatever makes the most sense for your particular organization. Step 2, once you've determined the like costs that you're going to group together, is determine how you're going to allocate those costs. That's what's called the allocation base. So, for example, things such as depreciation or use allowance, interest, operations, or maintenance, methods to allocate those might be square footage, number of rooms, full-time equivalent employees. General administrative expenses might be allocated on a base of total direct costs or total direct labor hours. The following chart has a number of different methods to allocate different costs. If fringe benefits is in your cost pool, you may allocate those based on direct labor charges. The Human Resources Department or telephone expense or information technology might be the number of employees per program. Finance Department might be the number of transactions by program. Planning and evaluation may be direct labor charges. Once again, This is not to be an all-exclusive list. Rather, there are multiple ways to allocate those costs. With that, let's go ahead and open up polling question number 3.
Sure, and that poll is open on that right side panel. This time we are asking, what is your primary allocation base? Do you do this by direct labor hours? B, direct labor costs? C, employee headcount by program? Or D, budget? So you do have another half a minute or so to think about this and go ahead and get your answers in. All right, a few more seconds. I see we actually have a flurry of activity of people getting answers in, so a few more seconds to finish those up. All right, our poll is closed, and you should have results.
And once again, there's really no one right answer for this. A number of different people each organization can have a different base or allocation, and a lot of organizations would say they don't have a primary method of allocating costs. I would say the one answer that's not correct on here is to allocate your charges based on budget. It's actually one of the methods that is specifically excluded or precluded, rather, by A-122 that says you cannot allocate your costs by budget. They must be after the fact and actual. So those folks who answered budget to this question might want to take another look at their allocation plan and make sure that their plan is, in fact, in agreement with A-122. The HHS Grants Policy Statement says that a cost that benefits 2 or more projects may be allocated on any reasonable basis as long as the costs charged are allowable, allocable, and reasonable. So that gives us lots of flexibility as we develop our plans for allocations, and that is a good thing as we allocate these charges. Step 3 in our plan is to determine the order of allocation. Now, once again, there's no right answer, but I would tell you that the order in which our expenses are allocated does matter and does impact the bottom line, as we note here on the bottom. So a typical way to allocate charges is to allocate the facilities-related charges first, and then to allocate out the general or administrative function charges after that. Once the charges for a particular cost pool are allocated back to the programs, that particular cost pool is then closed out. Step 4 in the process is to prepare a cost allocation plan. A cost allocation plan basically documents or memorializes all the decisions that you've made thus far in putting this program together and how you've determined to do it. This also needs to be in writing. It needs to define expenses, and typically what you see is a reference between the cost allocation plan and your general ledger and describing what goes in each. One very important element of this is defining what costs are directly allocated and which ones are going to be indirect costs. And then finally, define the pools and the allocation method. By providing a written cost allocation plan, this will help you greatly adhere to the consistency requirement so that you are applying the same cost allocations every single month and that you don't allocate on one basis one month and a different basis another month, which is not allowable under A-122. Step 5 is do a test run. Once you have your plan all laid out, then go ahead and actually allocate out a month's expenses under your plan to see what the results would be. What this does is allows you to see whether your end result is reasonable or not. If you end up with 99% of your indirect costs charged to one program and 1% charged to 10 other programs, it probably doesn't pass the reasonableness, or what I refer to as the smell test. And then finally, step 6, get your plan approved. This is, in some states, a necessity to have the state approve it. In others, that's not a requirement. But at a minimum, for internal purposes, the executive director should sign off on the plan so that they know how costs are being allocated. Potentially your board should be involved in the process and looking at a very high level, not a detail at it, so that they understand. And finally, your auditors need to somehow have some input into this process, because indirect costs are such a major portion of your expenditures overall that you don't want it to be a surprise to them, or worse yet, you don't want to have some technical glitch in your plan that then causes a whole bunch of question costs at the end of your fiscal year. So elements of the plan and working the plan, how do you actually step through that? First, you need to determine the unallowable costs. So there are a number of costs that cannot be charged back to federal projects. One thing that sometimes happens is people then say, well, we had alcohol, we can't charge that alcohol back to a particular federal project, so we'll put it in the indirect costs and leave it there. Well, the result of that, of course, is that it gets put into the indirects and then it gets charged back to programs. So moving it to the indirects doesn't make it allowable. If an expense is unallowable, it needs to be charged to corporate activities and needs to be paid for from some means other than federal projects. This is once again, not an inclusive list, or an exclusive list rather, but some of the things that are unallowable costs are alcohol, bad debts, certain types of advertising expenses, almost all types of contingencies, certain legal costs, penalties, fines, donations and contributions to other nonprofit organizations, foreign travel that have not been approved or pre-approved rather, entertainment costs, fundraising costs, investment management fees, lobbying costs of any type, and social club costs that have not been pre-approved. Those costs should all be charged to corporate or something other than a direct federal project. Then second, go ahead and charge out the direct costs. These would include such things as your capital expenditures, but your goods and services charges that can be tied back with a final cost objective to your programs. Next, pool the indirect charges. So all your charges for salaries, wages, fringe benefits, indirect costs get charged to the appropriately related pool that we have previously talked about. Fourth step is to allocate direct wages. Most organizations, as we previously saw from our polling question, have some sort of influence of either direct labor charges or direct labor hours in the allocation of their pools. These require allocation through a personal activity report, or PAR. The rules under A-122 state that any time that is charged to a federal project must be able to be linked back to that cost objective. And this is usually done through a personal activity report. So even if you only have indirect charges, because those indirect charges do get charged back to a federal project, they need to have a personal activity report. So the personal activity report would be by individual, and it would account for their time. So in this example, this is the summary at the end of the month, and you would line up all your employees and then have them charge their time. So in this case, this is the end of the week actually, and we're accounting for 40 hours for each employee, whether they are charged to a direct program, CSBG, weatherization, or LIHEAP, or whether it is charged to a corporate or a leave or administrative account, they would total to 40 hours. Then you would total the total labor hours on this line, and you would then get the resulting percentage allocations by each different program or activity at the bottom. Finally, then you would go ahead and allocate the fringe benefits pool, most likely based on the same way that you did direct labor hours as a percentage, and then allocate out your other pools on whatever method you have delineated in your cost allocation pool. And at this time, we'll take another break for questions, and I see that a few questions have come in while we've been talking. So first of all, it says, could you provide an example of a joint cost? So a joint cost is a cost that benefits more than one project but does not benefit all projects. For example, if you had multiple locations and you had two programs that shared a particular location, the costs should only get allocated to those two particular programs for that location. If you have LIHEAP and weatherization in one location that share staff, but the CSBG and Head Start do not use or utilize the time of those, you should only allocate that cost, the related cost, to that particular person. Another question is, can resource development or grant writing fundraising be included in cost allocation? It can be included as long as it's an ongoing application. So grant writing can be included, fundraising cannot. These are two separate activities in the minds of federal folks in A-122. So grant writing to continue the projects that you currently have or to apply for new grants can be charged as an indirect expense in the current year. If you're raising unrestricted funds, that type of resource development from contributions, for example, cannot be charged back. And the reason for that relates to program income, that if federal money was used to generate revenue, then it becomes federal money. So it's not something that you would want to do in that regards anyhow. Another question is on clarifying what advertising costs are allowable. So generally, advertising costs to operate a program are allowable. General advertising to expound upon the virtues of your organization are not. For example, if you have a LIHEAP program and you are advertising to get people involved in the program, you're soliciting participants to come into the program and provide their application for services, that's an allowable expense. If you put up an ad or a billboard that says, ABC CAP agency is awesome, give us money, that would not be an allowable expense for federal purposes. Another question came in on allocating finance department by transaction and how does the PAR play in that. The PAR, once again, is the personal activity report. So the personal activity report is going to allocate the costs that go into the pool for the cost of the finance department. The number of transactions would be a potential means denominator and numerator to allocate to the particular programs. So there's two different steps in allocating a cost. One is to get it in the right pool, and then the other step is to get it back out of the pool and get it to the program. So you would use the transactions for that purpose. Are there other questions?
That is all that we have seen come in thus far, but those were great ones, so we do encourage you to continue to put those in as they come up.
Excellent. Well, let's continue on and looking at an example. And I realize the numbers on here are not huge to look at, but if we looked at an example of what we had just talked about, this is how it would look. Now, keeping in mind that most of us don't use the big green bar paper that accountants used to use. Most of this information is kept track of in computer software, but this would be a graphical representation of what that looks like. So program A, B, and C here are your different types of programs. That might be CSBG, weatherization, LIHEAP, etc., Head Start. Corporate, remember, those are the activities that are not allowed to be charged back to a federal project. Fundraising, lobbying, those types of expenses. And in our example, we have indirect pools, and we're going to assume that we have $10 million or more of federal money, so we need to have at least 2 pools, one for facilities and one for administrative costs. First thing we do is we go ahead and we book our charges that were made, so this would be all the expenses that were made for the year, or the month, or the period, whatever time that period is. The second step is we're going to go ahead and we're going to concentrate first on allocating out our first indirect pool. And the first indirect pool that we're going to allocate out according to our cost allocation plan is the facilities charges. So the total of the facilities charges are $35,000. And the way we would do that is we need to allocate to every pool that is open. So the green here would be an indication of totaling up all those numbers. And if you look down at the bottom, the total of those numbers is $2,150,000. The allocation base that we have is $35,000, this number right here. And that, if we work out the math, gives us a percentage of 1.628%. So to allocate out those expenses, we're going to take 1.628% of each of our charges to date, and we're going to add in what the allocated facilities charges is on the next line. Then you can see that what we do is, because we've allocated that expense out, we need to decrease that expense so that we're not double counting by putting a negative $35,000 in the facilities. So if you did a cross-foot on this line here, you would end up with a total of 0. Once again, that zeroes out that pool, and going forward for this closeout period, that pool is considered closed and will no longer be considered. The next step is then to continue this. Now, our second step would be to allocate out what's in the administrative pool. Here we're going to take a new subtotal, in this case the ones that are in pink or whatever color that is, peach I guess, total those up, and the total of those numbers is $1,168,721. The total in the administrative pool is $1,016,000. We would get an allocated administrative allowance of 86.95%. We put that on to each program. And once again, if we did a crossfoot on this line, it would crossfoot to 0. And the entire amount is now allocated back to programs. So when we get done with our cost allocation process, the result is we have nothing left for cost in the indirect, and all the costs are now back to our programs, A, B, C, and our corporate subtotal. In general, cost allocation is an accounting principle. It's almost always applicable. Allocation among activities and funding sources use cost allocation. Slightly different is the concept of indirect cost rate. An indirect cost rate is a mechanism to approximate indirect cost as a percentage of direct costs. One of the challenges related to this method is that not all funding sources will accept it, and to have an indirect cost rate, you must go through an approval process with your cognizant agency. It's not automatically approved if you just decide that you want one. There are 3 main types of indirect cost rates. The first is what is referred to as a predetermined indirect cost rate. This is not subject to adjustment. So you would allocate the cost versus this pool, and that would come in and be an indirect cost rate. A second method is a fixed rate. This is a predetermined rate, but the difference at the end of the fiscal year carries forward as an adjustment into the following year as either a positive or negative number. And finally, the third method is a provisional rate. This is a temporary indirect rate used during the year until a final rate is established at the end of the year and then is adjusted. At this point, we'll go ahead and do our final polling question, which actually consists of 2 polling questions.
All right. That is open on your right side panel, and because there is kind of a 2-part to it, you do have a minute and a half instead of just a minute. So in this case, we are in fact asking, regarding your indirect cost reimbursements on grants, do you receive more indirect cost reimbursement than needed to cover administrative costs? About the right amount of indirect cost reimbursement to cover administrative costs, or receive less indirect cost reimbursement than we need to cover administrative costs? So while you are thinking about that, do get those answers in, and if your answer is C, that you received less indirect cost reimbursement than needed to cover administrative costs, then if you could answer the question below, which is how would you respond to that? By decreasing direct services to cover the shortfall, B, finding other unrestricted funding sources, or C, making cuts to administrative functions such as IT, human resources, planning, etc. So if you could go ahead and get those answers in. All right, the poll is closing. We did have a couple of late stragglers on that, so we'll try to capture those then as we get our results. All right, we should be able to share those.
So regarding the indirect cost reimbursement on grants, do you receive more indirect? Not surprisingly enough, no one said they get more indirect money back. We did have a good percentage of people that actually said that they receive about the right amount, and unfortunately another good percentage of folks that said they receive less indirect back than their actual costs. So for those people who said that they receive less back, the significant answer there is that they were finding other unrestricted funding sources to cover the administrative costs. The one advantage we have for those of us who are CAP agencies is we have CSBG to help cover some of those types of expenses. I would quickly run to a couple of questions that have come in while we were doing that polling question. The first question really relates around fringe benefits and what happens with fringe benefits. So fringe benefits typically are put into a cost pool, and those costs are allocated back to the programs. And even if the employee does not receive the fringe benefit, it is still a cost to the agency of having that employee, so it is a cost to that federal project for the benefit. There is a direct benefit from that. The final question that's come in is how long can an agency have a provisional rate? Does it have to be approved by the cognizant at the end of the fiscal year? And so a provisional rate is just like any other indirect cost rate, and provisional rates only run for a calendar year, or not a calendar year, but for the fiscal year, unless they're approved at a period of time longer than that, although I don't think I've seen that happening. Most indirect cost rates only get approved for a 12-month period. The GAO, the Government Accountability Office, did a major report on indirect costs in May of 2010, and I think some of the conclusions from that study are really interesting as we talk about these costs. There really were 3 major conclusions to that study. The first is that how indirect costs are applied are so inconsistent that it leads to many challenges. What they found is that when they were looking at guidance that went from the feds to the state and from the states to the locals and from the locals on to the further delegate agencies, that they were having substantial problems interpreting those rules. And so they found that even the federal government, who was providing guidance on how to run administrative or indirect costs, were not providing good information in all cases, because they didn't truly understand how that worked either. So one of the things that we've talked a little bit about, and one of the findings from the study, was the confusion on administrative versus indirect costs. So in general, and this is certainly a confusing topic, no doubt, but administrative is a function. So administrative expenses are the costs of leadership, human resources, finance, IT, or technology. Indirect is really a method of allocation, whether it is the opposite of a direct charge. It's an indirect charge. So you can have indirect charges that are administrative costs. And what they were finding is a number of people did not understand the difference between these concepts. And it's really kind of almost a nuance to try to explain in short order, but they are different concepts, but they are certainly a lot of overlapping. A second consideration of this was that the overhead or the administrative limits that are in place by a number of different programs are inadequate to cover the cost of administration. So some programs have a 5% administrative limit, and that doesn't come anywhere near the allocated indirect costs or administrative costs to run that program. Another finding is that people were given bad guidance in grant award packages, so the people who were monitoring the programs didn't even have a good understanding of what indirect or cost allocation was. They also found that many localities had different practices based on reimbursements of indirect, even though there should only be one federal standard. And the third major consideration that they found was that there was a difference in indirect costs incurred, and that lack of reimbursement led to gaps in delivery. So people were reducing their infrastructure in IT, staff, training, etc., in order to get their limits in sync with what resources was available, and it really simply just was not enough of indirect. So as we look forward to what is potentially coming down the pike under the new OMB guidance, and keep in mind at this point that this is not final, this is not replace A-122 at this point, but relatively soon we will have new guidance on all of the OMB circulars that will get replaced by the new super circular. And this is a sneak peek on what is coming or what is potentially coming. So please don't change your practices within your organization to what we're about to talk about, but it's important to have a heads up on what's coming. Generally, the change in what OMB is looking at is moving away from cost allocation and looking at replacing it with an indirect cost rate. And what they are going to propose, or what they have proposed in the draft language, and we'll have to see whether that sticks to the final language or not, but the draft language says that there will be a flat rate instead of negotiated rates for those who don't currently have it. The purpose here is to establish a win-win, and the thought process is an indirect cost rate is a lower cost back to the federal government than what allocated costs are. They're saying that organizations will be allowed to extend their current negotiated cost rate, indirect cost rate if they have one, and for those of us who do not have a negotiated indirect cost rate, we will have one under the new guidance. It will be a 10% of modified total direct costs for 4 years. And one of the keys here is that they are saying that this negotiated rate must be honored by all pass-through entities. Specifically, if you look in the draft guidance in Chapter F, Subchapter 3, Paragraph 615, they talk about some of the cost allocation concepts or cost concepts that we've talked about today. They define direct costs in that document, and those are direct costs, are those costs that can be identified with a particular federal cost award objective, just like we talked about. Things that are unallowable are services to members or clients of the public that have to be treated as a direct cost, but then allocated to a corporate or a non-federal source. Paragraph 616 of the same subtitle talks about indirect costs, and they define indirect costs as those incurred for common or joint purpose benefiting more than one cost objective, or in other words, more than one federal project. And it has the same requirement that if you have more than $10 million in direct federal funding, you must have at least 2 cost pools, and that's what we've talked about. So that does not change from the current A-122 guidance. In paragraph 616, they also describe in more detail this new de minimis indirect cost rate. It is going to be 10% of your modified total direct costs. And modified total direct costs are defined as salaries, wages, fringe benefits, materials and supplies, services, travel, and subgrants up to the first $25,000 of each. Excluded from this is equipment, capital expenditures, rent, and participant costs. And then kind of in conclusion to what we've talked about, there are some tricks and traps, some final thoughts, if you will, on cost allocation to remind you of as you go forward and reevaluate your existing plan or go and develop your plans if you haven't done that already. Remember that cost allocation and indirect costs are not the same thing. It is not okay to allocate costs based on budget. It is specifically precluded in A-122 as well as the new OMB Super Circular. You also cannot allocate cost based on available resources. It must be an after-the-fact allocation based on actual. The cost allocation requires a plan and following it. It has to be consistent. A final evaluation of cost allocation must produce reasonable results. When you get done, you have to give it the final smell test. One thing to note is that frequently indirect costs become a home to fraud. A number of fraud investigations that I've conducted over my time in public accounting, a number of these have somehow included being filtered through the indirect costs. And one of 2 reasons for this is pretty clear in my mind. First, if the cost is split, you might have a $3,000 cost that gets split amongst 50 different grants, and so the amount that ends up in each grant is $10. Well, who cares about $10? It's not a significant or a material amount, so it frequently doesn't get looked at, and the fraud is allowed to go through. The second major reason that cost pools or indirect costs can be a home to fraud is that in many instances, it's an area that no one has accountability for. And this is a place where all the costs get dumped and no one has ultimate accountability for this because the ultimate accountability is by the program managers when the cost gets allocated back to the particular program. When that cost comes back to the individual program, it no longer maintains its identity as the original cost, and no one can really tell what it is. Another issue is don't allocate unallowable costs. If a cost is unallowable, it is unallowable, period, and can't be allocated or a portion of it allocated back to federal projects. Going through the cost allocation process does not in any way make it less than an unallowable cost. Finally, allocate indirect costs to all functions. In other words, if you have activities that are unallowable for federal purposes, it is considered a direct cost and you must still allocate indirect costs to it. Political cost, informational, fundraising, corporate charges, member services are activities that you can do, you just can't charge them back to federal projects. you must have an approval process for allocation. Just like there is an approval process for journal entries, it's important to have an approval process for the allocation of indirect or cost allocated expenses. It is important, as you think about cost allocation, to have a plan to recover administrative costs before accepting grants. As we talked about just recently, frequently the allowable limit on indirect costs is not enough to cover the cost of that program. If that's the case, if you have to have some other means to cover that indirect cost, because the cost is real to run the program, and if you can't cover it through some other corporate sources, then what's going to happen is you'll create a deficit with no way to cover that. An important piece in cost allocation and indirect costs is educating department heads on the mysteries of indirects. Frequently, there's nothing that causes tension more within organizations than at the end of the month when the huge cost for administrative charges comes through on a department's budget, and that particular program manager was not able to anticipate that cost. Now, instead of providing service to those that we serve, they are covering indirect costs, and frequently those program managers get very upset. A lot of what we talked about today was really looking at a graphical representation of what happens. And frequently you don't see this. This is the inner happenings of what happens in your general ledger system, but it's important to know what happens. Also, take advantage of your software and don't do something that you don't have to. And finally, keep it simple. Too many methods, there's many methods and many answers. There's no one correct answer to cost allocation. The more complexity that you add to the project, the more you will have options and chances of making errors. This is a prime example for keeping it as simple as possible. And finally, the resources, things that we have talked about today. First of all, the GAO study that we talked about in terms of studying indirect costs, that's actually the third item that's listed here. The OMB Super Circular, the draft version, the most recent draft version, can be found here, as well as all the other circulars that we talked about today, A-122 included. And then I've included two simple but adequate cost allocation plans for you to look at. And these are, don't copy them and just change the name. Make sure that they fit your situation. But cost allocation plans don't have to be 75 pages long. They can be short, sweet, and to the point. And with that, I would take any final questions that we might have before we wrap up today.
Yes, we have had 3 or 4 that have come in over this kind of last section here. So how do you avoid challenges when administrative limits don't cover indirects?
If I had the answer to that one, unfortunately, I would probably be making a mint. There is no real good answer. I think the political environment that's out there wants to limit administrative costs and somehow perceives that administrative costs are evil. The reality is we can't run a program without a finance department, without an HR department, but no one wants to cover these costs. And as the GAO study found, frequently programs do not cover their administrative costs. The reality, what happens is organizations cover administrative costs to the extent that they can from their projects, and to the extent that they can't, they either have to charge those administrative costs back to CSBG under program support provisions, if that's an option, or alternatively, have to somehow produce corporate resources to cover those costs through donations or contributions or other resources. Unfortunately, there's no real good, easy answer to that one. It is the reality of the line of work that we're in.
All right, thanks. And we do have several others coming in, so we'll keep going through our list of questions then. Do you know when the super circular will be put into effect?
We don't have an exact time. The answer to that is basically at any point now. The comment period was closed this past summer, and the final step in the process is for OMB to review those recommendations, those comments, and there were over 300. I think there were 331 comments that were received. We've had 2 drafts of the document, and so the version that's out there is a second draft after a concept paper. So I think the draft that's there is very, very, very close to what we're going to see as a final document. I think there's a couple of major questions that are kind of outstanding at this point, but I don't think we're going to see something that's substantially different from what we're seeing in draft form at this point. But in terms of a particular date, I don't know what that will be. Once it's actually issued and finalized by OMB, the next step in the process will be that each department will have to codify the OMB circular, or it's not necessarily called a circular anymore, but the OMB document, and put it into their Code of Federal Regs for their specific department. And at that point, then it will have the force of law. So, you know, at a minimum, we are a year away from it having the force of law. But also remember that many of us are on a fiscal year basis, and so we need to know kind of what that's going to be at the beginning of our fiscal years as we start, and it'll impact kind of when it goes into effect. So I don't have any good answer for you. Stay tuned. I'm sure that the partnership will send out some sort of blast when we have that final language.
All right, thank you. Next up, can indirect costs be allocated to equipment costs that are included as direct costs?
Yes. So equipment is allocated as a direct. It can't go through the indirect, and then it can, depending on the program, it's not a very easy answer, but depending on the program, it can receive an indirect charge.
All right, thank you. Is the time spent preparing the annual proposal for CSBG, weatherization, et cetera, considered fundraising, or can the time be charged to the current CSBG or weatherization contract?
Those costs can be charged to the current contracts. They're not considered fundraising. Fundraising that the A-122 talks about is if you have a resource development department that's going out and seeking contributions. So grant writing is not really considered part of that.
All right, thank you. Let's see, our next question up, are there any preferred methods for cost allocation?
No, there's not a preferred method for cost allocation. There's really, this is one of the areas that is more of an art form than a science per se. There are overarching general rules in terms of things that your plan cannot violate or that your plan must do, but as long as your plan is in compliance with the circular A-122 at the current time, then that method is allocable or is allowable. And so it really depends on what makes the most sense in your particular circumstances.
All right, next up, what is a participant cost?
A participant cost is a cost to support a particular, like it might be, for example, in a job training program, it might be the scholarship that someone receives or tuition payment that someone receives to participate in a school program or a higher ed program. So it's something that goes to the benefit of an individual recipient.
All right, thank you very much. Next up, rent is excluded from MTDC, but included where?
That is for the new rules relating to a de minimis indirect cost rate, And so the cost still gets allocated to the program. It's just not subject to receiving an indirect cost allocation on top of it. So in other words, the charge for rent is only rent. It's not rent plus an indirect allocation. So you would still allocate your rent costs according to your cost allocation plan, but you don't get an indirect on top of that.
All right, then. Thank you very much. Questions keep pouring in, which is great, then. Next up, who should approve a cost allocation plan? Would that be the board, cognizant agency, whom?
Well, it depends on the specifics in your organization, but I think at a minimum the board should, and I think that the cognizant agency or the state, the pass-through entity, should approve that plan, or at least look at it so that they know what they're funding. I also recommend that the auditors take a look at it. They won't necessarily opine on the cost allocation plan, but they are going to, in essence, opine on that when they do their audit of your financial statements. So having them take a look at it ahead of time might help you. They might be able to give you some suggestions to make sure that you don't end up with any type of finding related to your cost allocation plan.
All right, thanks. Let's see. Next up, would you recommend hiring an outside expert to apply for an indirect cost rate, and do you have any recommendations?
I think it all depends on what your internal capabilities are. So the organization that I work with, we have an indirect cost rate. Our controller applies for that on an annual basis, and we don't use outside services for that. One of the things that's required, however, if you're thinking about using someone from the outside, is you're not allowed to use your auditor to put together your indirect cost allocation plan or your indirect cost proposal, because then they would in essence be opining on their own work. So just keep that in mind, that it would have to be someone other than your auditor, and so don't hire someone to do that and then hire them to be your auditor the next year, or if you're thinking about hiring them as your auditor, don't hire them to do your indirect cost allocation plan. The first year is more difficult than the subsequent years. I mean, in subsequent years, you're kind of just following the plan that was laid out, assuming that you don't have any major changes to your system. The first year is a little more time consuming than your subsequent years will be. It's not a fun process, but it's certainly not something that's rocket science either.
All right, then. Isn't charging CSBG more indirect in and of itself a breach of the apply to all concept?
Absolutely. You should never charge any program more than its allocable share. When I was talking about charging potential administrative costs to CSBG, CSBG has a provision for program support, and assuming that your funding source has approved your CSBG plan, you can work program support for programs in, and for CSBG purposes, that's actually a direct charge. So under no circumstances would I suggest allocating an indirect disproportionately, other than according to your approved cost allocation plan. However, CSBG does allow program support as an allowable cost to that particular program.
All right, thank you. And last but not least, we have grantors often treat costs that are pooled differently. For example, some call IT admin while others could call it program. Does this different treatment by the grantor impact the pooling of the cost?
That's a great question. I mean, what you call things sometimes depends on how it gets interpreted later, and this is another prime example of whether something is an indirect cost or an administrative cost, because something might get cost allocated as an indirect cost, but it might also be a direct cost, or it might be a non-administrative cost. So what you call things certainly can matter, and make sure you understand that before you develop your cost allocation plan, not after you develop your cost allocation plan.
All right, thank you. I believe we have hit on the questions that have come in. If there are additional questions, you can go ahead and try to get those in really quickly, or you can also email them to me after the webinar, and we will get them over to Kevin and get you answers. Just as a note, if you do have additional questions after this, there are a couple of other resources on this. Kevin did actually do a somewhat similar presentation for us a little over a year ago, so that presentation and recording are going to be available alongside this one. We do have a cost allocation, red flags and remedies toolkit. It's a giant guidebook that is fantastic, done in partnership with CapLaw and KSOL, so that could serve as a resource if you have additional cost allocation questions. And we had mentioned personnel activity reports, so there is actually a guide on that as well, PARs, the do's and don'ts. So I do encourage you to take a look at all of the resources available for you on this. So do take a look at the resource bank at csbgtta.org. With that, are there any closing words, Kevin, that you'd like to impart with everybody?
I would just like to say happy holidays and happy New Year to everyone.
All right, well, that'll do. There will be an evaluation that will pop up at the end of the webinar today. We do appreciate your participation in that. Let us know what you thought about today's webinar, what we can do better, what went well, and any ideas that you have for future webinars from the partnership. So with that, I echo the happy holidays and have a good afternoon. Thank you, everybody.